Hi friends, welcome to a brand new segment of FinveStocks, Friday Basics, which will give you good insight about Indian equity market. My sincere effort in this segment is to create awareness to all in simple language. This series will be arranged in such a way so as to understand everyone who are beginners. Please share this video to all those who wish to learn, understand and participate in stock market. Please don't forget to subscribe and click the bell button to get the notifications of upcoming knowledge-packed videos on personal finance and stock market. Welcome back to FinveStocks, where we make everyone understand the basics of money management. Before going into this video, make sure you watch earlier videos of this series, which is mentioned in the I button. In our last video, we saw how to read the financial statement. But understanding the financial statement other than say revenue, profit from financial statement is not an easy task. So the main use of financial ratios is to convert the numbers in financial statement into some useful terms so that anyone can easily understand the company's future. Hi friends, welcome back to FinveStocks. Today is the last session on fundamental ratios, that is operating ratios. So by this we covered almost good ground in fundamental analysis. So from next week onwards, we will go deep into technical analysis. Although we started with technical analysis, the basic fundamentals of technical analysis, in future we will see different methods how to use technical analysis in an effective way. How to read the charts, how to understand the price movement using various technical analysis, all these things we will see in our upcoming videos. So in today's video, we will see what is operating ratios. What are the different type of operating ratios? The different types of operating ratios are fixed asset turnover ratio, total asset turnover ratio, working capital turnover ratio, inventory turnover ratio, inventory number of days, accounts receivable turnover ratio, and days sales outstanding. So now let's see operating ratios one by one. So first on the list is fixed asset turnover ratio. So what is fixed asset turnover ratio? By formula, fixed asset turnover ratio is the ratio of operating revenues upon average of fixed assets. So what is operating revenues? What is fixed assets? All these things we explained in our earlier videos. Operating revenues you can see in our profit and loss statement video. Average of fixed asset you can see in our balance sheet video. Both the videos I will put it in the description. So this ratio measures the extent of revenue generated in comparison to its fixed asset. It tells how effectively the company is managing its fixed assets. Some of the example of fixed assets are land, building, plant machinery, equipments, furnitures, etc. So it tells how effectively the company is using its plants and equipments and other fixed assets. Higher the fixed asset turnover ratio means the company is effectively and efficiently managing the fixed assets. Here we will take example of Polycab. Fixed asset turnover ratio is operating ratios upon average fixed asset. In case of Polycab, for last financial year, the overall revenue is around 11,297 crores, whereas average of fixed assets is 1,890. So the ratio comes to be around 5.97. That means Polycab is able to generate 6 rupees per 1 rupee of fixed assets. Mostly this ratio is used in capital incentive companies. So higher the fixed asset turnover ratio means higher efficiency in utilizing the fixed assets. Whereas low ratio indicates inability of the firm to utilize the fixed asset efficiently. So ideal ratio, there is no ideal ratio as such. There is no benchmark value for this fixed asset turnover ratio. One can use this ratio for comparing with company to company or with industry average or with previous on track record. The next operating ratio is total asset turnover ratio. It is same as fixed asset turnover ratio. The only difference is instead of fixed asset, we need to take total assets. So in case of Polycab, the total asset turnover ratio is total revenue, that is 11,297 upon total assets, that is 7,006 crores. So the ratio comes to be 1.61. That means Polycab is able to generate 1.61 rupees for 1 rupee of total assets. Assets turnover ratio is efficiency test to the company. It's also called financial efficiency ratio. It decodes operating efficiency and financial strength of a company. It shows the ability to generate sales from its assets. It shows how efficient assets being used and churned to generate sales. Higher the asset turnover ratio, the better the usage. The next of the operating ratio is working capital turnover ratio. The working capital turnover ratio, that is net sales to working capital, indicates how much revenue the company generates for every unit of working capital. So what is working capital? Working capital is the difference between current assets and current liabilities. What is working capital, current assets, current liabilities, all these things mentioned in our balance sheet video, mentioned in the I button. Working capital is current assets minus current liabilities. So when working capital is positive, that means working capital is surplus. If it is negative, means the working capital is deficit. Higher the working capital ratio is the better one. So working capital turnover ratio by formula is the revenue upon average working capital. So we will see similar example of Polycab for finding out what is the working capital turnover ratio. So in case of Polycab, the average revenue is 11,296 crores, whereas the average working capital is 2,644. So the ratio comes to be around 4.27. That means company is able to generate 4.27 rupees of revenue every year for 1 rupee of working capital. The next operating ratio is inventory turnover ratio. Inventory turnover ratio is the ratio of cost of goods sold upon average inventory. Cost of goods sold is cost of materials, cost of purchase of goods, purchase of stocks in trade, cost of power, fuel, cost of packing material, etc. The higher the inventory turnover ratio, the better. We'll take example of Polycab. The overall cost of goods sold is 7,308, whereas average inventory is the tune of 2,156. So the inventory turnover ratio is 3.39. That means Polycab turnover is inventory 3.39 times in a year. The next one is inventory number of days. Inventory number of days is total number of days in a year upon inventory turnover. So we will take the same example of Polycab. Inventory number of days is 365 divided by 3.39. That is approximately 107 days. This means Polycab roughly takes 107 days to convert inventory to cash. The next operating ratio is accounts receivable turnover ratio. Accounts received turnover ratio is the ratio of operating revenue upon average receivables. Assume a company is having operating revenue of 3000 crores and average receivables is 300. So accounts receivable turnover ratio is 10 times a year. This means the company receives cash from its customers 10 times a year. Next one is the last of operating ratio, that is days sales outstanding. Days sales outstanding by formula is 365 upon accounts receivable turnover ratio. In the above mentioned example, days sales outstanding is 365 upon 10, that is 36.5 days. This means the above mentioned company takes about 36.5 days to raise an invoice and collect money against invoice. By this, we covered all financial ratios. Also, we have covered a good ground in fundamental analysis. Already we discussed about technical analysis. What is technical analysis? What is the basis of technical analysis? How it will work and all. But now we will go deep into technical analysis. We will see how to read the charts, what are the various technical analysis tools available, how to efficiently use these technical analysis tools to predict the future price. All these things we will see in our upcoming videos. I find technical analysis tools as an important tool for understanding the price discovery of a company. In our next video, we will see what is technical analysis. We'll start with a brief introduction about technical analysis. What is the history of Japanese candlesticks? What are candlesticks? What are the various type of candlestick patterns available? All these things we will see in our next video. In our upcoming video, we will see more about technical analysis, like what is support and resistance, what is moving average, what are indicators, what are chart patterns, etc. That we will start from our next session. So stay tuned to learn the upcoming technical analysis session in coming weeks.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.